The trading setup I'm about to present to you in this video has a win ratio of over 90%. Just think about that, 9 times out of 10, when you enter the market, you end up making money. The strategy is very easy to understand. It works on all markets including Forex, stocks, and crypto. It's also suitable for day trading, which makes this strategy appropriate for beginner and advanced traders. Our video will teach you how to find a signal, how to place a trade, where to place the stop loss, and then the take profit target as well. We will also show you how to add these indicators to your chart and what settings to use at the end of this video. For now, let's understand the idea behind this amazing strategy. If you've been studying price action for a while, you've noticed that the market has 3 phases. We have an uptrend, a downtrend, and consolidation. Uptrends are present when the price makes new higher highs and higher lows. The opposite is true for downtrends. The market forms new lower highs and lower lows. You see, it's a lot easier to benefit from such price movements as the trend has already been established. You certainly don't want to be trading in a ranging market. This is when the price makes equal highs and lows. A lot of traders are aware of this, yet only 1% of them know exactly how to benefit from this information. I encourage you to take a look at this chart. Where do you think the most ideal place is to buy? Here, where the market has already made a move, or where it has made a retraction? It's no secret that the right time to buy is at the pullback. This way you make sure that you enter the market at a discounted price. However, it is not as easy as it looks. There is a major problem in that we do not know if the price will pull back before making another move in the same direction, or if it will completely reverse. This is why we need to use certain indicators to determine whether the pullback is just a retracement and not a change in the trend. So how exactly do we find the perfect trade entry? First, let's start with our long trades. So for a buy signal to be confirmed, the following conditions must be met. Number 1 is the moving averages you see on the chart have to be aligned in a way so that the top is yellow, the middle is green, and the bottom is purple. Number 2 is the price action must move above the lines and then pull back into the green one without crossing and closing below it. The third and final rule is that the white dots that you can see on the chart must remain below the price during this pullback. If these conditions are met, a buy order should be placed the moment the candlestick closes above the yellow moving average. Our stop loss is placed at the white dots, and for our take profit target, we will be going for 2 times the risk, with an adjustment of the stop loss to the break-even level as soon as the price reaches a 1-to-1 risk to reward ratio. Okay, let's see one more example. Notice how the price broke above the moving averages, confirming the uptrend. The lines are aligned in the way that they should be, and then during the pullback, the candlestick touched the green moving average without closing below it. The white dots also did not move above the price when this retracement happened, which does tell us that this bullish momentum is still in place. So we're going to be taking our long position as soon as the candle closes above our upper MA. For a sell signal to be valid, the following must be met. First, the price is moving below all of our moving averages. Second, the MAs are aligned so that the bottom is yellow, the middle is green, and the top is purple. Third, the price action should retest the green MA without the candlesticks closing above it. And then fourth, during the retracement, the white dots must remain above the price. Once you have all of these conditions met, we wait for the candlestick to close below the yellow MA as our last confirmation for a short entry. The stop loss is placed at the white dots, and our take profit target will be at 2 times the risk, with an adjustment of the stop loss to the break-even level as soon as the price reaches a 1-to-1 risk to reward ratio. Okay traders, pay very close attention to the following trades so you will fully understand the strategy. With this secret, you will be able to generate consistent income for trading. Now let's do our backtesting and see how well this strategy works in different markets. On average, you will be getting around 5 to 10 signals per day from different markets. The quality of the signals guarantees success roughly 9 times out of 10, which is truly unbelievable. If you have not subscribed to the channel yet, please do so right now, and also turn on those notifications so you don't miss our future videos. Make sure that you do not deviate from the rules. You should only enter the trade once the price has met all of the conditions. You can see for yourself that this method has a really high success ratio. I also recommend not risking more than 5% of your account per trade. If you are enjoying this video, please leave a like, as that contributes a lot to the growth of the channel. Now let me show you how to install these indicators to our chart. First, log on to Tradingview.com and open the charts. Click on the Indicators tab and search for 3 moving averages by Advent Trading. Open the indicator settings and change the lengths to 21, 50 and 100. Also in the style section, we will be adjusting the colors. For the second indicator, we will be adding our parabolic SAR. The inputs will also remain on default. All we're going to be doing is changing the color of the dots to white. Alright, that is our setup complete. I hope you find this video useful. If you have any questions, please ask them down in the comment section below. If you enjoyed, please leave a like, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.